Hello and welcome to another update video about Doge. Doge continues to be in this pattern that we discussed in the previous video as well. See, if we zoom out a little bit here, this is the daily chart now, there isn't really much going on. I mean, this could turn into anything really. Could even be that this fourth wave is unfolding as a triangle, but it's a bit too early to confirm that. In this scenario, I mean, we would be dealing with an A wave, a B wave, a C wave, a D wave, an E wave, and one more low. Not saying this is definitely what's going to happen, but I just want to mention, I think you should know it, right? I think you should know it. I think you should know that another bear market low is still definitely something that on the Doge chart cannot be ruled out. Okay, it has to stay on the radar, cannot be ruled out. Doesn't mean it has to happen. This is not like prediction for a new bear market low, but it means the risk is there. And if certain levels break, you know, we need to be very much, we need to be ready for it potentially if it's needed. We have to be ready. At the moment, the idea is, however, that Doge is likely going to follow the wider crypto market. Doge is one of the coins that hasn't really moved much yet, but it also moved a little bit. And the only way really how I can really count a bear market low as complete is in the white count, and it would have to be a truncation. I have to use a truncation. So the yellow count still suggests another bear market low is possible in one way or another, but the white count suggests the low could already be in. Now, again, that means already to you I'm not highly confident the low is in because truncations require additional evidence, okay? So I cannot just believe them. Truncations means that it's a really imperfect move to the downside. It did not, that last wave down did not make a lower low below the previous low, but it allows me to still count it as complete. It's an exception though. I'll use it now to track a bullish structure because it's for me the only bullish structure that makes sense in a diagonal pattern, like for example, other coins are moving like Matic, okay, like Link maybe. So that makes kind of sense to me. And I've got here in this structure a wave 1, a wave 2, wave 3 possibly finished. We'd like to see the wave 4 now. It might be unfolding, and then one more high in a wave 5. That seems reasonable. In this scenario, to really confirm that a lasting low has been established, in the first instance, I need to see 5 waves up. 3 are not enough. I'd like to see it actually form a little bit more of a healthy wave 4. I mean, it doesn't need to come down much more, but I showed it to you last time, I think, in this alternative ABC structure. We said, okay, look, maybe the wave 4 is already in, but it did not even touch the 38.2 retracement. Doesn't need to. It reacted already to the 23.6 fib, which is normally the minimum for a wave 4. I haven't got that on the chart, but I would prefer to see here an ABC structure that's a bit more extended. It's the same scenario. I mean, is the wave 4 here? Is it here? We will really only know once we see a proper impulse to the upside, or at least, or break above the last high at 10.7 cents. So basically, as long as the 7.2 cent level is holding, which is the golden ratio of the third wave rally, okay, as long as that level is holding, one more high is preferred in wave 5. And then we should get an ABC structure down afterwards. At least that would be needed to further confirm that a lasting low has been established. So this might act as a pullback trade setup, not a high probability one. Better will be 5 waves up, 3 waves down. So what else to highlight here on this chart? Well, what would be a target for the 5th wave? Based on the information I have right now, I can specify that further once I have a confirmed low in place for wave 4 here, yeah. But based on the current levels, I'd like to see 11.6 cents to 13.8 cents as a target for the 5th wave. I will actually leave that on the chart now. That's the area between the 1.618 extension and the 200% extension. That would be ideal as a target. Let's move that on. Around about 11.5 to 13.7 cents would be ideal. And that's sort of, it doesn't matter if the wave 4 is already in or if we get a more extended wave 4. Again, I can give you a more precise target once the wave 4 has bottomed and I have clear evidence for that. That's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.